Hi, everyone. Welcome to our Harvesting Revenue Week 2. Happy Thanksgiving. It is Thanksgiving week this week, but what we are trying to do in this course is really think about, obviously, things we're thankful for, mainly revenue. So good time to kind of assess our revenue, to take a look at year to date, and also to really begin to set some targets. So if you remember last week, we talked about all of the different places our revenue come from, that we really want to take a look at year to date, what we're earning in those categories, whether it's food or drink in person. We touched on delivery fees, we touched on catering. So really looking at what has changed in our business on a revenue side between 2019 and 2021, because even if your business is back, even if you're doing better than you have been in the past, it's probably inherently different than it was. So we really want to be aware of those differences so we can make sure that our targets are set up for success in those different areas. Because even with inflation, like we talked about last week, it doesn't have to be a bad thing for our business. We just have to build a target that embraces the inflation that is there. So if you're paying, $120 for a case of chicken, we need to make sure that we're selling it accordingly so that we're not losing money and that we know that we are making money on everything on our menu, because we want our business to succeed, right? And that's what we have to do to succeed. So this week, we're going to take some of that work that we did last week and in the homework, and we're going to build it into a 12-week forecast. So first, we're going to kind of walk through what a forecast is. And then from the homework that we set up, we should have some good information to go ahead and put our targets into place. So if you remember, last week, we were supposed to do our revenue trends for 2021, 2020, and then 2019, and set up our data sheets. So in what our in-person dining looked like, online ordering and catering. And then we really wanted to look at our item pricing to see how has that been impacted by raising prices. So if I raise prices 5%, what's my new weekly target or monthly target compared to what it was, and by category. So all of this should have a good understanding now of where our revenue is, revenue areas. And with this information, what we're going to do is create a weekly forecast. So I know, especially for the people out there that are chefs or very detail oriented, it can be hard to have a summary, right? We inherently want to add 100 lines and have every expense broken out. There are places for that, and that is certainly important. But in the forecast, the whole idea is to have a summary so that we can change it quickly. So I like to use the example of a weather forecast, right? A weather forecast doesn't give you all of the ways that they have tracked and the Dopplers and all of that, right? They break it down into a very simple, manageable, easy to understand forecast. And with that information, it's not perfect, right? You know that it is an estimated target for tomorrow. So we maybe think that the weather is going to be 50 tomorrow. Maybe it's 60, maybe it's 40, but that's using all that information for the best estimate of tomorrow. And that's what we're doing here. So again, there are times where we want much more in terms of specifics. This is not one of those times, because the idea is with our forecast, we want to communicate it with our team, right? We don't want our team to have to learn accounting to understand our targets, because everybody on our team has to be aware of our targets in order for us to be successful. So how to create a weekly forecast would be to start with a 4-week slate. Now you could put dates on there. You could say starting next Monday, or you can just do week 1, 2, 3, and 4 and come up with our ballpark, not much changes in my business. It is what it is forecast. Either way, we're going to start with our revenue. So what do we realistically think we bring in sales? Now, if you remember, we had all of those specifics. You can certainly add here if you want to say, okay, my target's going to be, 10,000 in-person dining, 6,000 delivery, 500 catering, or something like that. Or you can just keep it as a total. But this would definitely be an area where we really want our team's involvement, right? We want them to set the targets. I was talking to a client this morning who actually was sort of doing experimenting on the different data they can get about their customers, right? One place that they can get better reports now are actually from their customers' credit cards, to see like how many cards are new cards. That would definitely help in our forecasting, because if we felt like we were getting new cards, maybe it's 10%, maybe we have a growth built in here of 5% a week or something like that. on the same way that maybe we know if we're building this last week, week 1 is Thanksgiving. We know Thanksgiving is bad. We know we're closed. We would want to adjust that accordingly. The goal here is we want this to be as realistic as possible because this is going to actually tie into our cash flow. So if this looks very basic, it might be. But my goal here is not to set up a summary that I'm, going to dig in and geek out on accounting. My goal here is cash flow. So if I set my target of 16,250, I know my food and beverage costs. I can do that as a percent. I can do my labor as a percent. And then I know about operating expenses are about 5,500 a week. And I do have an Excel where you can fill this out and come up with some of these numbers. Then I would say that right now at 16,250, I'm going to lose about $1,300 a week. Maybe I'm okay with that. Maybe there's something I would want to do here, but that's my target. Now that's important because the most important piece of information here is this 1,300. I know that with that 1,300, now I'm going to really want to monitor my cash to see, does my cash go down by 1,300? Does it go down by more than that? And over a 4-week period, have I lost money or made money? But this is that starting point. So this is my meaningful weekly forecast. Now, if you're looking at this going, I don't have time for another Excel, I don't have time for any of this, I just want you to think about weekly. This isn't saying that we're changing all of our accounting to weekly, but it is important to look at things weekly if you're in hospitality. And the reason is that there's consistency in weekly, right? It would be hard to go through the month of November this year versus last year. And if we're really being honest in terms of targets, the weekends are different, number of Saturdays may be different. But if I'm going to do a 4-week forecast, this is pretty easy for me to just compartmentalize Thanksgiving week from what I think happens week 2, 3, and 4. I can also probably pretty easily run a report in my POS system for the same week prior year, right? And all of a sudden I have some really good bite-sized pieces of information that get me to a 4-week rolling average. If I'm doing monthly, it's harder in hospitality because of the importance of weekends, right? Either weekends are great for you, Friday, Saturday are your best days, or with some clients who do, more corporate work and they're closed. So an extra Saturday actually means fewer business days, but either way, it's not consistent. Whereas 4-week rolling is consistent and it's very easy to change. So that's a big benefit. Again, thinking of things like holidays, special events, it's easy to change and compartmentalize those events from the rest of the schedule. So that's really what we're doing. Again, not going away, but this whole exercise is about understanding our revenue. And I think for revenue, looking weekly is very important, that it's helpful for your team. It's a language your team can understand. It's a language they think all the time because they think weekly, right? So this is something that is good to communicate with, even if we still have a monthly budget and still have monthly information in other places, right? Okay. So with that information, again, I'm going to then expand into my 4-week rolling average. So if we look at this last page here, and again, I'm going to send the link so you can do this yourself. This ends with my 4-week rolling average, but now I can expand that again very quickly. I can go 12 weeks. I could go a whole year if I wanted based on weekly revenue targets. Again, much quicker than if I were to do a monthly budget, right? We want to do that, but that's just not here because this is more team involvement and cash flow. So if I took those targets that I set, then I know that I was losing $5,250 in period 1, which would be my 4-week rolling average, but maybe I change a few things and lose 4,300 in period 2. But either way, that means if I started this exercise with $60,000, then my expectation without anything extra is that my cash is going to go to 50,000 by the end of the 8 weeks. So now all of a sudden I know, okay, I'm either going to make the decision to go to 50,000 or maybe I need to do something. And chances are in this environment, the do something is either my labor, my pricing, I just haven't raised prices quick enough to keep up with the inflation, or my food costs, right? And again, maybe it's raising prices there. But either way, I know I'm either making the decision to lose $8,000 or I'm making the decision I need to change it and I need to change it fast and be aware of exactly where I am. So the next piece to our harvesting revenue is we need to track it. Right now, some people say, well, I can pull any report that I want out of my point of sale. Like, why am I going to do this? I have all this data. You do have the data, But what you don't have are the trends without having to just keep running the report. So there's something very important, and you hear this all the time in business and self-help, whatever. There's something very important about writing it down, right? The pen is powerful. In this case, the key, the Excel is powerful, right? So there's something very important about whether it's you or your management team to writing down our weekly actuals, right? So if we have a target and we know that our target is 16,250, it means nothing if we don't actually visit the target after the week is done, right? So we set a target of 16,250, but where are we actually? How close were we to this target? So if I were to run these weeklies, what I'd find is I'm actually heading in a good direction and I'm higher than I thought, right? So my target was 6,500, but my sales were actually 80 or 65,000 were actually 86,000. So just by setting up this weekly trends and getting your managers to update it every week, we can have a 4-week trend that goes back to our target. And again, focusing on that cash or that cash gap and see how close we were. So here I would see, oh, wow, I'm actually much higher than I thought. That's great news. But on the flip side, my cost of goods is also much higher than I thought, right? I was trying to get 24%. I'm actually at 35%. So something is going on in my cost of goods. Not uncommon. Most of you that do this, I guarantee you're going to see it's gone up unless you've done a price change. So if you haven't raised prices in the last 16 weeks, this number has probably increased 3 to 5%. If we see that, that's okay, but we want to see the difference. What does that look like dollars wise that I'm spending now than I was 16, 20 weeks ago? And then labor, same thing. I might think I run a 37% labor, but I might actually run a 53% labor. Now, the one thing here would be, are there other things included? Maybe my target's just way off and I might run 27% wages, but remember, my business pays 12% on every dollar of wage I pay out. So if I pay someone $1 in wages, I pay 12 cents as the business owner for that wage. So when I think about my labor, have I factored that in? Now, maybe that amount is in my operating expense, but if it's in my labor, and I like to put it in my labor because we really should know the total cost of our labor. So the only thing that I would maybe take out would be owner pay. But otherwise, what is my true labor percentage? And what does that look like to my budget? So just from tracking these trends, I would see, okay, my sales are much better than I thought, but I really have an issue with my COGS because it's 35% and I thought it would be 24. And my labor I thought was 37 and it's actually 53. So what does this do to my cash flow? Well, now what I would do is, okay, I need to update my week 2, right? Because remember my week 1, I had the targets. I thought I would lose $1,300. So now I'm going to go to week 2 and I'm going to say, okay, well, I'm actually running at a 21.9, but maybe there were some events, maybe there was stuff going on. To be conservative, I'm actually going to put a target of 19.5. I hope it gets to 21. My target is going to be 19.5. What does that look like? Because this is very quick and there's probably not much I can do between now and next week on my COGS, I'm going to use my most recent trend. So I know that I'm running a 35% trend and I can see that that's what it's been for a while, right? But maybe no one on my team had time to dig in. We really weren't aware. But either way, if I go back, 35 is where I am. I'm very sure on that. So I'm going to adjust my target to 35%, at least for this week, right? Now I might be able to change it in the weeks to come, but right now it's too soon. So then my labor, same thing. I thought I was running a 37%. I'm actually running a 53%. There's not much I can do here because that's my 4-week rolling average. So I know that that number is pretty accurate. So I'm going to use that number for week 2. So that means even though my sales are higher by a significant amount, I'm actually losing more money because my margins have gotten worse. This is very common. I cannot tell you how many people I have worked this through and found this result in the last 12 to 16 weeks. This is what happens. This is why we have to be aware of what's going on, because chances are we may not notice that our cash went down by 1,300. We may think it was, oh, sales tax hit, so we're okay. But if we're looking at these trends, we're going to be aware of what is changing in our cash flow, right? We're going to see it. We're going to see that our expected was 1,300. So if nothing else happened, it actually could have been worse, right? Because we could have had loan payments, other things that come out. But now this means I want to adjust my targets, right? Because I don't want to continue to lose money. So maybe I do put in the 22.5 for sales. I say, well, I'm running a 21.9. So 22.5 just has to be where I hit, right? I'm going to run promotions. I'm going to, do things, advertise, whatever it is, 22.5. We're at 22.5, and again, not adjusting COGS right now because I'm not assuming the 22.5 is from a price increase because it's only $500 higher than my last week's trend. But what I am going to really work on is my labor, right? Maybe I've had people who've worked overtime. I've had schedules where people are standing around. I know that I can shave $1,300 off my labor, and that combined with higher sales is going to get me to break even. So right away, I know exactly what I need to do to keep going at break even. Now, if I did this again and I kept on to week 5, 6, 7, and 8, I'm at break even. Maybe I want to do more. Maybe I want to work on my COGS, because what would that change if I got my COGS down to 32%? Maybe there is a price increase. If we go back to last week and we see the impact of a 5% price increase, it's not more people in the door, right? It's the price increase of the item. So now I'm in the decision maker seat, right? I'm in the driver's seat and I'm not reactive. I'm proactive, knowing that in reality, if my business were to be healthy, my bottom line should always be 10% of my sales. So if I'm selling 22,000, my profit should be 2,200. If it's not, then I'm leaving money on the table, as we hear people say, right? That I'm really hurting my business by not having that 10%. And the reason is because there's always going to be stuff we don't plan for, right? 10% isn't just you taking money and being profitable. It's building a nest egg so when the air conditioner breaks or the oven breaks, you have cash to buy that equipment, right? If we're running at $62 a week in profit, we don't have any money left over. So that's where it's important for, again, us to be proactive. And it all starts with us knowing where our revenue comes from and being able to set a good forecast. So I hope this helps give you some motivation as you head into Thanksgiving week. Again, it's been a crazy few weeks, a few months, few years, right, for COVID. So please be gentle on yourself. This is very much a time to reflect back on all the great things that you did during the last 18 months, and really a good time to assess how we can make it even better going into 2022. So I truly appreciate you watching our video today, and please feel free to reach out if you have any questions as you work through this assignment.